All right. Thanks for coming on today, Dave.
Yeah,
I am a lot of news going on right now in real estate, and I think the big question I'm getting from a lot of my buyers and sellers is what's happening with the rates. So, what can you tell me?
yeah, no doubt. That's a hot topic. Um, I will say rates had gotten worse today. Um, as a general rule, anybody that's closing in the next 3 weeks, we're recommending this morning that we lock their rate now before it gets any worse.
Okay.
The retail sales had come out this morning. And last month when they came out, they were flat. So that's a good thing for inflation because we want to show inflation low. So the Fed wants to or feels that the economy is now ready to start doing some rate reductions, which will lower mortgage rates indirectly. And unfortunately, this morning they came out and revised last month's figures that retail sales were up 0.3 for that month. Doesn't seem like a lot, but when you analyze it, it gets to be a bigger number.
Hmm.
And this morning's rates were in whole digits increase. So the market got nervous based upon the fact that people are spending money that they don't have right now. Because when you look at the savings rates are at an all-time low and credit card balances are at an all-time high. And so it looks like people are doing more purchasing with places like Affirm or Delay Pay on PayPal. And when they do that, if they pay cash, of course, it's coming out of their savings. If they're going to borrow $1,000 on a credit card, maybe they're going to have a $30 payment. If they're going to borrow $1,000 at Affirm or places like that, they're going to have a $150 payment. Consequently, that squeezes things even tighter for the got to have it right now generation, and it's a spiraling effect. So the economy today had a knee-jerk reaction, and bond prices went up. When bond prices go up, that means actually bond prices went down, excuse me, meaning that rates are going up, and they have already. And it looks like right now what the economists are saying this morning is that there's less than a 50% chance that the Fed will drop rates in July at this point. Forget about June. June is long gone.
So we're not even talking June. We're saying the question is what's going to happen in July at this point. So we're pretty
July,
much
July, and it's less than 50%. This is a busy week with housing data.
hmm
Wednesday, we're going to see mortgage apps and a 20-year bond auction. And Thursday, we'll see initial jobless claims and existing home sales. And I think the initial jobless claims will be a potential second market mover this week on Thursday. And that's why at this point in time, we're recommending to all our clients, anybody that's closing in less than 3 weeks, that we should probably strongly consider locking rates before they deteriorate more.
Okay.
And so that really speaks to the fact, that really speaks to the fact that people that are on the sidelines waiting for rates to drop before they buy, that's a huge mistake.
hmm
As you recall, when the market was, I don't know, a couple, 3 years ago, when we had rates in the 2s and 3s, we were 6 million housing units short. Well, when rates started to tick up, the buyers didn't know what to do, so they paused and they all went into rentals. And if you look at building permits during that time, multifamily building permits were on the increase because they didn't have enough housing units, so they had to build more rentals.
So
And
apartments and
yeah,
general.
exactly. And so
Mhm.
now we're seeing there's very few permits that are being built or being drawn for multifamily. It's all single family because they realize that as rates do start to come down, those people are going to come back out in the market, and there is no housing for, or very little housing for first-time buyers. So we'll be back when the rates do drop. We'll be back to the point where you'll be bidding $20,000, $30,000, $40,000 over asking price to even have your offer considered, because there'll be multi offers. And when you bid over, that money that you bid over is lost equity that you lost, you can never gain. If you buy in a higher rate market like today, and there's fewer buyers out there, we can trade that rate out, in a short amount of time. So if you think about it as an extreme case for an average first-time buyer, let's say we're gonna be $200 cheaper later for the same payment. So let's just say you have to hang on to that for 12 months. That's 200 times 12, that's $2,400 more you paid to buy today for the rate. But if you wait, you might have to pay $20,000, $30,000, or $40,000 over asking. So imagine standing in a teller line with a $2,400 check. When you get to the teller window, which is, you would trade that in for 30 grand, which is what you're saving. I would spend $2,400 every day to save $20,000, $30,000, or $40,000.
And you're looking at that. So I think for a lot of people that are making that purchase, or who are talking about purchasing or planning on purchasing right now, it's not that they want to do it, they need to do it. And I think
it's a smart bet to do it right now. If they're thinking about it in the next 6 months, you're better off not to wait, because as rates drop, it's an affordability thing. When rates go down, prices will increase, and then more buyers are coming to market, and you're going to have to spend even more than that to bid, to get your bid looked at. I mean, you and I remember that, people were paying 30, 40 grand over asking, and their bid still wasn't getting accepted. And we're going to be in that same place when that happens. So a pause on the possibility of a rate drop, I think, is a positive thing for today's home buyers, because they're better off to buy in a higher rate market, because we're short so many housing units. And we can talk about why that is, but that's another story for another day.
I will say from my perspective, I've done, let's just say I've done about 30 appointments for new customers in the last month or so. Of those appointments that I've done, about 90% of them are active. So when the customer reaches out and says, hey, I want to see X property, almost always I can tell them that property is available, which is a good indication from my side. I remember, last year or the year before, somebody'd say, hey, I want to see this property, and it'd already be sold. It'd be sold it'd be pending before we'd even get to that first showing. So for buyers who are looking at properties, there's actually some inventory there where people are able to make a choice on what they're purchasing. And on the two deals that I've put together here in the last couple of weeks, both of them, one was below list price and one was within 2% of list price, just a little bit over. I think we had like 3 offers. We went just a little bit high. Basically, I'm telling customers today that I can pretty much, as long as you're willing to hunt for a home, that I can get you at or near list price today. So that, I think
that won't be the case later. So I think they're better off buying today. And I'm setting some people up with loans that I know in 6 months, when they qualify, they'll be refinancing. And because they'll be able to save a couple $100 a month. But
are those
they're better off to do it now than wait, because when the market turns, it'll be a flood again, and it'll be crazy.
When I went to Detroit with you last year, they were talking about, was a refi program. Was that strictly for FHA? It was like a 6-month, no cash out program I think that wrapped up last month. Do you anticipate that we'll see more programs like that coming forward is that just?
Yeah, and I'm still able to do that
Okay.
to a certain extent. We still have um, special rates for refinances and where we can waive the underwriting fee. And basically, here's how you look at it. Well, they're going to think, buyers are going to think, well, now I got to pay closing costs all over again. How am I going to afford that? Well, on a refinance, it comes out of equity. It doesn't come out of cash. And closing costs on a refi are typically a little bit less. But more importantly, it's more likely going to come from equity that has been gained because you bought today instead of cash. So if you didn't buy, you're going to be further behind than if you buy today and refinance. It's going to be cheaper, and refinance people typically don't pay anything out of pocket except for maybe an appraisal if we need one.
So they're looking at probably maybe a point on a low cost refi, maybe
closing costs. Okay. Part of it is a percentage, part of it are fixed fees. So it could be a point, it could be 2 points, it could be. It depends on the loan size. The larger the loan, the less the cost is as a percentage. The lower the purchase price or loan amount, the higher the percentage. So, and if I work with somebody,
300 grand.
Well, let's just say they're going to buy on the Iowa border, where you can find a $75,000 house. Nobody wants to live there, so prices are really cheap. But those closing costs as a percentage could be 4 or 5% versus somebody buying or refinancing in, I don't know, Plymouth or Woodbury or wherever that's a $400,000 loan. It could be 1 point. So it really depends on loan size.
So let me just clarify. What you're saying is nobody wants to live near the Iowa border
or the Canadian border. Both borders. If you look in the range, you can find houses that are super cheap. I mean, I've seen houses for $19,000. Crazy, But
the work
it's a ghost town, and nobody wants to live there.
Yeah,
you got to drive 50 miles to get to a Walmart. I mean, so there's nothing there.
Do you shop at Walmart?
No, but a lot of people do.
Okay. All right.
But if you go to there's Walmarts on almost every corner. If you go to a Target, it might be 100 miles away.
Nice.
So,
rates aren't great, but
the market is good.
The market is good.
And when it turns around, rates will be great and the market will be horrible.
Nice. All right. Well, I was not excited about the news, obviously. I think as an agent, I want to get to my clients.
It's the real thing. Your viewers want to hear the real story. I don't want to sugarcoat it, but there's light at the end of the tunnel by buying today. Yeah, that's what they need to know. Why would I want to buy today? I think we gave them a compelling reason
to consider it. Yeah, definitely. And I think for the buyers that I'm working with, they need to move. And so it's, do I continue to rent and wait for the light at the end of the tunnel, or do I get in the tunnel now and then be a homeowner when you get to that light? And I'm going to advocate for home ownership. Every day you rent, you're losing money, and every day you own, your potential to gain equity. So there's a real upside to ownership. So I want to thank you for coming on today, Dave. Maybe we can do this as a regular thing, maybe on Mondays if you got time for me. Have a little chat about what's going on. So
I'll happy to provide it for you, Justin. Not a problem.
You're welcome. And then I'll send you over a link to the YouTube channel. Make sure you take a second to subscribe, Dave. And also, if you're watching this video, subscribe. I'll also put some of Dave's contact information at the bottom of the video. So if you want to get in touch with Dave or give him a call or reach out to him, I'll have his contact information available for him.
Yeah, I've been doing this an awful long time, Justin, as you know. Most buyers that I work with, I tell them how long I've been doing it, and they say, that's longer than I've been alive. And so I've been this is my 47th year in the industry. So, and I didn't start when I was 10 either. So it's just how it is. And I'm happy to use that experience and knowledge to benefit your home buyers.
All righty, Dave. Thanks for coming on.
Thanks. Have a good one.
You too.
Bye.